Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Compliments of the seasons to everyone in the house. I'm so excited to be with you here this morning as we are going to be taking another fresh look at the financial market as we gradually approach the later part of this week. Well, before we begin the session, let's run through our daily routine by allowing us to confirm that we are all on the same page together. So if you can see my screen, sorry, and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. Your highs will be some positive feedbacks for me to know that we are all on the same page and we can kickstart the session. Thank you very much as you do so. All right, so I can see Sadek, good morning to you. Taj San, good morning. 44312883, good morning to you. Antu, good morning. Bubail Musabilo, good morning to you guys. Thank you very much. Hello, Carrie. Good morning to you. Glad to have you around with us this morning. Ilgari Manley, good morning to you too. And I think on this note, we'll take this as a positive feedback that we are good to go this morning. So once again, I welcome you to another edition of the Extreme Speed Live, your daily dose of financial insights and trading strategies. Well, today it's another promising edition where we will be looking at the financial landscape from a technical standpoint, using simple and fundamental tools such as trend lines, key levels, and chart patterns only to decide what our next line of action will be. Well, since the beginning of the week, we have been monitoring four major assets actually, which includes the USOILSPOT, the USTech100, the GBPUSD, and finally the XAUUSD, all of which have been doing fairly well since the beginning of the week until recent times. We're beginning to notice a little bit of consolidation phase across board, which is of course maybe as a result of the anticipation of the major event coming up later in the week. And of course, as we gradually approach the festive period, there is a high chance of low liquidity in the market as well. So we are going to be taking into consideration all of these factors while we try to make a well-informed trading decisions for today. So I encourage us all to stay tuned in so that you do not miss out on any of the valuable ideas we will be discussing today. For those of you who are joining us for the first time, I'm very excited to have you around with us this morning, and I do know that you will be wondering what this is all about. Well, as technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York trading session. Now, this session here usually kickstarts officially 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during the course of the session so you don't miss out on any of the insights that we will be deliberating on today. Now, it's important to note that my aim in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you get to comprehend our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So, with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiment for today's trading session. And of course, we know that by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we have been monitoring since the beginning of the week, our center of focus on the economic calendar is mainly on both the United Kingdom and the United States economic docket. Now, we usually focus on high impactful event, but for today, Thursday, December 21, due to only one high impactful event on the radar, I decided to include a medium impact event so that we can have a richer perspective into what majority in the market will be looking forward to today as a catalyst to drive price movement. Now, the first major one on the watch list today, all of these are going to be coming up simultaneously in about 2 to 3 hours from now, is the gross domestic product annualized for quarter 3. Now, for those who don't know what this is, well, this is a key economic indicator in the United States representing the annualized percentage change in the country's economic performance, representing the total value of all goods and services produced within its borders. Now, the anticipation of this event can significantly impact market sentiment as it provides a comprehensive view of economic health and growth in the economy. Now, higher than expected GDP growth often strengthens market confidence in that economy, leading to positive price action and potentially influencing central banks' decision on interest rates. Now, the US gross domestic annualized quarter 3 for the previous month came in at 5.2% expansion, and based on what we have today, economists are projecting a 5.2% expansion again. Now, what this simply means here is that based on the data we have presently and based on the situations, economists are suspecting that there's going to be an expansion in the United States, of course, but it will be at the same rate it did in the previous quarter. Now, we look forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? Now, another important one that we are looking out for today is the personal consumption expenditure, which measures the average changes over time in the prices paid by consumers for goods and services. Now, anticipation of this data also influences market sentiments as it provides insight into the inflationary pressure and potential trajectory of interest rates. So the Federal Reserve will also be monitoring this to give an insight into how sticky inflation is in the US economy. Now, if we look at the data here, the previous month states that 2.8% was for the previous quarter, and economists are projecting another 2.8%, which is more or less of the same range. So we look forward to see what the actual data will be on this one too as well. Will it be just as expected, below expectations, or even beyond expectations? Then another important one that we should also take note of today is the initial jobless claims, which of course will be giving us an insight into the strength or weakness of the US labor market. And of course, this is usually released by the US Department of Labor, and it measures the number of people filing first-time claims for state unemployment insurances. Now, a larger than expected number indicates weakness in the US labor market and reflects negatively on the US economy. Now, if we look at the previous data for the month of November, it came in at 202,000 compared to the expectations that economists are projecting for the month of December, which is currently at 215,000. So they are expecting that there's going to be a contraction in that sector as regards this. So we look forward to seeing what the actual data will be on that one. Then finally, another important event today that will be giving us an insight into the health of the United States is the Philadelphia Fed Manufacturing Survey, which is a spread index of manufacturing conditions within the Federal Reserve Bank of Philadelphia. Now, this survey served as an indicator of the manufacturing sector's trend, and it is interrelated with the ISM Manufacturing Index. Now, it is also used as a forecast of the ISM Index, and generally speaking, an above expectation reading should be considered as positive. Now, looking at the previous data for the month of November, we had a deficit of 5.9, and we have economists projecting a deficit of 3. Now, this is a sign that there is, though it's on the lower side, but this is a sign that economists are suspecting that there is somewhat growth in the manufacturing sector. So these are the events we will be looking forward to today, and interestingly, they will all be coming up at the same time in about 2 to 3 hours from now, which definitely may incite some volatility and in the assets we are looking at for this week. So with all the information we have gathered here, we have a better timing of what to look out for and how to prepare for our next move. Now, with that being said here, let's dive right into the chart and let's look at things from a technical standpoint. Now, the first asset, as usual, that we will be looking at today is going to be the US oil spot. Now, on the US oil spot, we have been doing pretty well since the beginning of the week. Remember that we have been buying this particular asset ever since price action did break out of that key level at the $72.50 level, as you will see right here. Now, this is quite a phenomenal fit for us, as we did capitalize on this opportunity. First of all, at the beginning of the week, we saw how price action moved over 200 pips, as you will see here, before the bearish momentum came in. And of course, we did move our stop losses accordingly. And depending on where you have moved your stop losses to after this bullish move, you must have closed in your positions between 100 to 150 pips on that first buy opportunity. Now, during our live session on Tuesday, we talked about the potential of an uptrend continuation, where the bearish momentum we saw here may likely be a retracement phase of that bullish move. And one interesting thing about the structure was the fact that price action was back at the resistance zone of that range we identified at the beginning of the week, falling around the $72.50 and the $72.60 area. And interestingly, it also shares a beautiful confluence with our ascending trend line. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we feel comfortable in a buy position, and of course look out for more opportunities to capitalize on an uptrend move. Now, with the situation we have here, I think right here during the live session on Monday, I told us all to trigger a buy position, and of course we saw how price action transitioned into something like a reversal pattern just exactly above the structure to incite an uptrend continuation. Now, remember, we had multiple levels that we did identify to capitalize, or let me say maximize the potential of that bullish move. So we added one more here. Then we also added one more at the breakout of the $73.70 level, and finally added another one at the $74.50 area when we added the last one right here during the New York session at the breakout of the $75.30, which of course that last position did not do very well at all, as we saw the beginning of the bearish momentum that took this market yesterday. And of course, I do hope we moved our stop losses accordingly on the previous three positions. If you did that, you must have been taken out with a reasonable amount of profit. Let's say a minimum of about it shouldn't be more than about let's look at it together here. So from here, we moved our stop losses somewhere around here. That's about 180 pips. Then this one to 130, that's about 310. And this one moved about 370, and this last one went into a loss. So roughly between 250 to 300 pips was what was on our kitty yesterday, depending on where you have moved your stop losses to. And for those of us who capitalized on this opportunity, well done, and kudos to you for being on standby. Then during our live session yesterday, I can remember vividly mentioning that if at any point in time price breaks down the $74.50 level, we might be seeing an opportunity to sell. And I did mention here that this is more or less going to be a counter trend opportunity. And for the fact that price action is still sitting above my ascending trend line, that I will not be taking advantage of that opportunity. But I did mention that if you are a counter trend trader or a scalper who loves taking short-term trading opportunities like this, you may be looking at capitalizing on that move, having your TP target somewhere or anywhere around the ascending trend line. And in fact, price did move about 80 pips thereabout before the next wave of bullish momentum has begun here. And I hope you took advantage of this move right here, because I did, as price action started finding buy pressure around this structure, which lasted about 1, 2, 3, 4, 5, 6 hours during the Asian session before it finally began a positive traction to the upside. So currently, we have about 2 buy positions running right now, where the first one is running in with about 60 pips in profit, while the second one right here is running with a loss of about 17 pips. So we have roughly about 45-50 pips on this current buy positions we are taking right now. So I would suggest that we move all stop losses to the above the entry point of this first position, and let's give enough breathing space for price action to move around while we continue to monitor price action. So with this in mind, with a well secured position at this juncture, what is going to be our next line of action for today? Well, before we go into the technical details of what the structure is saying, and which of course will be revealing to us the psychology behind the price movement, it's important we also keep tabs with the fundamental factors that are actually affecting the market sentiments behind the scenes. Now, if you remember yesterday, we talked about the expectation of the crude oil stockpile from the United States EIA yesterday, and it of course came in unexpectedly. And the downward pressure we noticed yesterday, that is this one right here, this downward pressure we noticed here yesterday could be attributed to the concerns about low demand, which was sparked by a surprise increase in U.S. crude inventory. Now, the U.S. EIA crude oil stock change for the week ending on December 15 unexpectedly rose to 2.9 million barrels, in contrast to the anticipated decrease of 2.2 million barrels and the prior substantial drop of 4.2 million barrels in that regard. Now, this unexpected inventory build contributes to the bearish sentiment in the crude oil market. And additionally, the U.S. Energy Information Administration reported that U.S. crude output reached a record 13.3 million barrels per day in the last week, marking an increase from the previous all-time high of 13.2 million barrels per day. So these are phenomenal figures that may likely inhibit the ascent of the U.S. oil, as this is inciting the idea that there is a large volume of supply in the global market. However, amidst this complex market dynamics, oil prices may find support from escalating tensions in the Middle East, as we all learned yesterday that most of the ship vessels now are no longer avoiding the Red Sea, which is more or less a shorter route to the various destinations. So instead, they will be taking longer routes to get to their destination, and this, of course, will increase the cost of transportation, hereby affecting the price of oil. And if this is going to be the case, there is a likelihood that oil prices will rise to meet up with the cost of operation as regards to the transportation. So all of these are with this current market dynamics behind the scenes, I will maintain a bullish bias, and of course from a technical standpoint we have structures which we will be using to guide our decision. So I won't really go into the higher time frame today, as we have a simple structure that we will be using to guide our trading decisions right here on the 1 hour time frame. Now, the first thing first we will have to acknowledge here is the fact that price action has been bullish since last week Friday, and in fact when we captured the series of pivot lows since last week Friday, we have this ascending trend line which has been supporting the bullish momentum since the beginning of this week. Now, as you know how we use our ascending trend lines in this community, as long as price action remains above the ascending trend line, we feel comfortable in our buy positions and we look out for more opportunities. So what this simply means is that we maintain a bullish bias here, looking out for more opportunities at the breakout of both the $74.50 level, having a buy stop order above that structure, and as well the $75.30 level, which happens to be the highest point price action has been for this week. So this is how we will be managing ourselves for any bullish expectations in this particular market for today. However, in as much as we are looking out for buying opportunities, you know how we do it in this community. We want to ensure we keep tabs with the potential direction of price action in the opposite way. Now, what are the chances that sellers could come in this market and push price to the downside? Now, since we already have our ascending trend line, and for those of you who have been with me for a while, you of course know how we will be capitalizing on the next move, as we will need this ascending trend line to be breached and broken to the downside before start considering selling. Now, if I want to consider selling, I would like price to take out all the buy positions within the $73.70 area, which interestingly shares a beautiful confluence with the ascending trend line. Now, to give a visual representation of what I mean, I would like to see a breakdown, retest of the structure, after which it would be good opportunity to join a decline to the downside. So you can see how crucial this ascending trend line is, as it will play a major role in guiding our decisions of either buying or selling this particular asset. So I encourage us all to mark this trend line on our chart, and of course those levels, as we will be needing them as a reference point to guide our independent trading decisions for today. So these are my views on the US Oil Spot for today, and if you have any questions, feel free to let me know in the comment section, and as usual I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right. So, in the absence of no questions, okay, I can see a couple of comments here. Hello, Giovanni6127. Good morning to you. 8912303297. Good morning. And I see Leonardo DV saying that how do I set up my buy or sell positions? I want to assume you're familiar with your sell and buy options on your account platform. If you do, just click on the button. And in terms of buy limit and sell limits, you have the options. When you click on the menu, then it brings out all the other options. You have the buy stop, the sell stop, depending on whichever one you want to choose there. Then Familiar 10 says good morning to you. And 12 here is asking, have the goal decision been made? No, not yet. So stay tuned in so you don't miss out on that one. So in the absence of no further questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. All right, so the next asset on our watch list this morning is going to be the USTech100, which did move phenomenally well to the downside yesterday as we saw that engulfing bearish candle striking through and breaking down that ascending trend line all the way to the downside. Now, if you remember vividly, we have been buying these assets since the beginning of the week, and in fact we scooped in some significant amount of profit, close to about over 200 pips thereabout, as we had multiple entries on this asset. Now let's talk about how the week started for us all and what led to the decisions we made. Well, at the beginning of the week we had this beautiful range where price was initially confined within the 16,645 level and the $16,590 area to emphasize the level of indecision going on at that particular point in time. And of course, whenever we identify this kind of range on our chart, it further emphasizes the level of indecision going on in the market at that particular point in time. And of course, we wait patiently for price to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Well, at no point in time did we see price come even close to the support line of that range, hereby negating the idea of even considering selling at all. So instead, we had a buy stop order sitting above the resistance line of that range to trigger our first buy position for the week. Now remember, we had multiple entries like I said earlier, as we added more positions at the breakout of the 16,670. We also added one more at the breakout of the 16,750, as you will see here. Now, during our live session yesterday, we acknowledged the fact that price action was within this range at the 16,835 and the 16,750 area. So we looked out for more buying opportunities at the breakout of the 16,835, which of course did a couple of hours into the New York session, but it never lasted long. So we had all our positions taken out following the strong bearish momentum in this market. And if you remember vividly yesterday, I did mention that we will be using this ascending trend line as our yardstick to guide our trading decisions for yesterday's session. So we marked out this trend line, which interestingly shares a beautiful confluence with that 16,750 area, which happens to be the support line of that newly identified range. So we agreed that a breakdown of the structure will definitely welcome selling opportunities, and in fact, if you had moved your stop losses accordingly, if you had moved set your sell stop order accordingly below the structure, we saw price move over 200 pips again to the downside before another wave of bullish momentum happened here. So if you are taking advantage of that opportunity as well, well done, and kudos to you for being on standby to capitalize on that move. Now, by now, you should be out of all sell positions right now, as if you had moved your stop losses accordingly, you must have been taken out. Now, with the way things are going right now, what is going to be our plans for today? How do we intend to capitalize on the next move, as every member of this market anticipates the GDP data coming in from the United States today? Well, to have a better perspective into this market to give us a well-informed trading decision, we would like to scale up into the higher time frame so we can have an holistic perspective into what is really going on in these markets. Now, scaling up into the higher time frame, I want to refresh our memories as to what we saw here at the beginning of the week. Well, what we did was to take into consideration the nature of price action since the beginning of the month of December, and in fact what we saw here was a bullish momentum where price action has beautifully transitioned into an ascending channel. So when we connected the series of higher highs, we have the resistance line of the ascending channel, and when we connected the series of higher lows, we have the support line of the ascending channel. Now, with this situation here, we did identify a marginal line within the range which demarcated the first half from the second half of that range. Now, the marginal line that demarcates the first half from the second half of the range was what we were actually using as a yardstick guiding the current bullish momentum we have been enjoying in the last couple of weeks. So we saw how price action had consistently respected this marginal trend line here. You saw all the pivot lows striking on this level at every point in time to push price to the upside. And we did said yesterday that a breakdown of this one could incite a sell-off, maybe into the support line of this ascending channel. And it appears price action is moving in that direction right now. Now, the question going into today's trading session is, how far will this bearish momentum go before the next wave of bullish momentum will happen? Well, since price action has broken down the 16,750, which shares a confluence with that ascending trend line, from a technical standpoint, we expect that price action may likely come back to retest the structure to incite another wave of bullish momentum. Now, if price action will go back to retest the structure, of course, it will go through a bullish momentum. So now I have a buy position running with the hopes that price may get into this area, and we are looking about 150 pips move in that regard into this area, and depending on how price reacts to the structure will determine what our next line of action will be. If buyers find it difficult to break through the 16,800, we could be looking at another wave of bearish momentum to the downside. And if price action happens to break out of that level, then we will be back within the buyer's territory, looking out for more opportunities to buy. Now, with this information we have gathered here on the 4 hours time frame, things will look a little bit much easier for us to make a well-informed decisions on the lower time frame. Now, scaling down into the 1 hour time frame, you will see that price action is currently trading at our weekly key level situated at the 16,670. So a buy position was triggered right here this morning while I was trying to dissect the current market structure. And the reason, if you look at the structure closely, you will see that this same 16,645 level was all that we needed to be broken to incite our first buy position for the week. And right now, price has broken out of that structure, looking out for more buying opportunities above the key level at the 16,670. Now we have more levels marked out on this chart, which we will be using to guide our decisions going forward. So we have the 16,750, which is closer to the ascending trend line. And please note that as soon as price gets into these levels, we move all stop losses accordingly to secure the positions while we wait and see how the market would react to that structure. And if it continues to climb new highs, then 16,835 will be another level we look out for more buying opportunities. So this is how we will be managing a bullish expectations on this particular market. However, if the market decides to continue the downtrend scenario without even retesting the ascending trend line that was broken yesterday, then we might likely be looking out for price breaking down the support line of this range at the beginning of the week to welcome selling opportunities. So I would rather wait for price to break down the 16,590, which beautifully shares a confluence with this ascending trend line we identified on the higher time frame. Now, a breakdown of the structure for me will be a beautiful opportunity to join the decline to the downside. So let's mark these levels and trend lines out on our chart so that we can use it to guide our independent trading decision for today. So basically, our center of focus on the USTech 100 for today's trading session is simply between the 16,670 and the 16,590, where depending on the direction of the breakout today, will welcome trading opportunities. So these are my simple views on the USTech 100. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off, see if there are any questions before we move on to the next asset on our watch list. You can use that time also to mark out these levels on your chart. All right, everyone. I see a couple of comments here. 6439, good morning. T-Kek, good morning to you. Stefan, good morning to you too. All right. In the absence of no questions, I hope that all I've said is quite understandable. And then we just move on to the next asset on our watch list. So the next asset on our watch list for today is the cable market, that is the GBPUSD. And in fact, we have quite an interesting situation going on in this market, as we'll see that in the last 12 to 18 hours now, the 1.26300 level, a level which we identified at the beginning of the week, continues to negate all attempt by the sellers to break through that particular structure, which further emphasized the strength of the buyers around this area. Well, for me, the market's bullish outlook remains very much intact as price action stabilizes around the 1.26500 level following a significant decline triggered by the soft UK inflation data that came in on Tuesday, I think, on Wednesday, yesterday morning, which incited this bearish momentum that went to the downside. Now, as it is right now, the pound sterling is facing challenges due to the subdued inflation in the United Kingdom, while the United States dollar saw gains on improved economic data from the United States. So in the last 24 hours, we've been noticing some positive data churning out from the United States economic docket. Now, yesterday, the consumer price index eased from the United Kingdom eased to 3.9% from the previous 4.6%, falling short of the expected 4.4% in November. Now, it is important to note that several federal officials have emphasized a cautious approach and discouraged premature speculations on policy rate cuts. Now, the interplay between the interest rates, central bank sentiments, and market expectations continue to influence the dynamics of this current market structure. Now, as it is right now, and considering the whole consolidation phase we have been witnessing here, this old one right here, I'm of the opinion that market participants may likely be waiting for key economic releases today for further insight into the U.S. economy, including the U.S. gross domestic product annualized for quarter 3, the initial jobless claims, and of course the Philadelphia Fed manufacturing survey, which are very, very impactful events to drive or serve as a catalyst for price action today. Now, despite the current bullish outlook, it is important that we also keep our options as open as possible, as sellers could still take a stance in this particular market. Well, so far this week, we've done fairly well. As you will see, we sold at the beginning of the week, which really didn't do anything for us. Then we had a buy positions. I think we had about 3 of them. We have the first one triggered right here. That was on Tuesday morning. Then we saw another one triggered here during Tuesday's early hours. And then finally, we had this one before the bearish momentum came in. So at this juncture, we are at a very crucial area in this market. Now, I also emphasize the importance of the impulsive move that brought us into this point. Remember, we had an impulse leg started at during Wednesday's trading session from last week. We saw this impulse leg, and the bearish momentum that started last week Friday was considered to be a retracement of that impulse leg. And of course, we did use our Fibonacci retracement tool to project where the retracement phase will end before another wave of bullish momentum will happen. So when we run our Fibonacci retracement tool through the impulsive leg, we had our highs focused at that golden zone area that is between the 50 and the 78.6% of that impulse leg, where we said we shall be looking out for patterns and structures that supports the idea of buying that asset. And of course, we saw signs of a bullish momentum around this area as soon as price action tested the 1.26300 level that was on Monday morning to give us a sign that we might be at that crossroad that will incite the next second wave of bullish momentum. And of course, this drove the idea of us buying at the breakout of the 1.266 500 level. Now price action is back into that area, and in fact in the last 18 hours now, we have been noticing buy pressure resume from this particular structure. As you will see, every attempt by the sellers to break through this area has always been met with stiff resistance from the buyers. And in fact, about 2 to 3 hours ago, we saw the strong bullish bearish momentum, which actually did break down that area a little bit, but immediately you will see that buy pressure is resuming again from that particular zone to further emphasize the strength of the buyers around this area. Now for me, I will still maintain a bullish bias. Remember, price action is still sitting above that ascending trend line we identified on the 4 hours time frame. So let me quickly show you that ascending trend line so you can see how important that trend line is going to be in guiding our trading decisions for today. So to do this, I would like to scale up into the 4 hours time frame. Now let's look at the 4 hours time frame right here. So right here on the 4 hours time frame, we did take into consideration the bullish momentum here, which actually gave us this couple of ascending trend line. But the most important one right now is this one we have here. Now, for the fact that price action still remains above this trend line, for me, is a sign that we want to maintain a bullish bias. Now, look at this 1.2600 level. This level here also shares a beautiful confluence with that ascending trend line. Now, look at what happened last week, Wednesday. We saw our price pushed up with an impulsive leg, and this may be the retracement of that leg, where anywhere if price still remains above the structure, we shall maintain our bullish bias to join the uptrend continuation. Now, the only condition that will make me want to sell the GBPUSD today is for price action to drop below this ascending trend line, break it to the downside, and in fact it will break the 1.2600 level too as well. Now if a retest of structure happen, that will also be a beautiful confirmation that we can feel confident in the sell position. And let's see how far the bearish momentum will go. And remember, we have a demand zone around the 1.25 area, which will be dovetailing to a minimum of 100 pips if price stops around that area. And in fact, if it breaks down that structure, then this could welcome more selling opportunities to push price to the downside. However, if buy pressure resumes and we have a reversal pattern here, it could incite an uptrend move. But pending the time that will happen, as long as it is right now, it's looking as if sellers are struggling to even break down the 1.263, hereby making us to continue to hold on to that bullish bias. So like I said, a breakdown of the 1.26 area will be all we need to join a bearish move to the downside. So now with this information we have here on the 4 hours time frame, let's scale back down into the 1 hour time frame to look out for opportunities to capitalize on the next move. Now, as it is right now, price remains above the 1.263 and we're beginning to see some bullish pressure resume right here, and I want to see price break out of this trend line to further emphasize the strength of the buyers here. So in that regard, I have a newly identified level at the psychological mark at the 1.26500 area, where the breakout retest of the structure would also have broken out of that descending trend line to incite an opportunity to buy. And if price action continues to find new highs, then a breakout of the 1.2665, the 1.270 level, and of course the 1.27350 will be welcoming more buying opportunities to maximize the potential of this bullish move. So that is how we are going to be maintaining buying opportunities today. So let's keep this in mind. Mark out these levels on your chart, and we are looking for buying opportunities only when price action breaks out of the 1.26, 500 level. Now, I already mentioned earlier what I want to see before considering selling this asset, as I would need price action to break down the 1.265 level, which also will have broken down the ascending trend line that we identified on the higher time frame before considering selling this asset. So I encourage us all to mark out this level, and let's ensure that our structures mature before we jump into any positions. So this is my simple view on the GBPUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. In fact, I'm already out of time, so I will just take the next 5 seconds to see if there are any questions before we move on to the next asset on our watch list. All right. So, Leonardo DV says here that brush up on the buy or sell positions again. Service was terrible. Brush up on the buy or sell position again. Service was terrible. What do you mean by that? Okay. You said, how do I set up my buy or sell positions, right? Okay. I said that on your platform, there are buttons that will tell you, that will give you the buy and sell options on your MT4 platform. I hope you've downloaded your MT4 on your laptop or your phone, depending on which one you're choosing. There is always a menu on that platform that tells you where to click for buying and sell. And then beside the menu, you will see your position sizing. That is, what position are you about to risk on that particular trade, which you want to be choosing accordingly before executing your trade. And I would advise you to, if you don't get what I am saying right now, you might probably want to do some Googling, Google it out and click how to buy and sell. And then you will definitely be given a well laid down prompt on what to do to execute your trade. So I hope that whatever I said here is helpful, but if it isn't, please do some Googling and you will get a better explanation to that. All right, Leonardo DV. All right, Stefan, good morning to you. Then this other name here, which I'm not sure I can pronounce. Well, good morning to you too as well. So in the absence of no further questions, I want to assume that we are all on the same page. And in that regard, let's move on to the final asset on our watch list for today. So the last asset on our watch list for today is my favorite, and that is of course the XAUUSD, which in the last 48 hours now we have been witnessing some choppy scenarios which further emphasize the level of indecision going on in this particular market. Well, although all our buy positions from yesterday, sorry, we only had one anyways. So what our buy position from yesterday resulted in a loss, and the market structure still continues to exhibit a bullish outlook as gold attracted some deep buying during the Asian session today, hereby reversing a significant portion of the previous day's decline. Now, at this juncture, I'm of the opinion that market participants appear to be anticipating a fresh catalyst before positioning for the next directional move. As a result of this, all eyes are going to be on the release of the economic events for today, especially from the United States. And later in the week, we also have the US core personal consumption expenditure that is on Friday, which could also impact the Federal Reserve's future policy decisions. So this in turn is expected to determine the near-term trajectory for the safe haven assets. Now, given the current market character, which exhibits a softer risk tone, I will still maintain a bullish bias with the levels we identified on the chart serving as our major yardstick. Now, for the sake of those who are not part of our earlier editions, let's quickly run through how the week started for us all in this community and what led to the situation that made us to maintain a bullish sentiment in this particular market. Now, at the beginning of the week, we had the situation where price was confined within the $2,024.80 level and the $2,016.10 area to emphasize the level of indecision that was going on in this particular market. And of course, you know how we use our flat ranges. Whenever we identify them on the chart, we exercise patience and wait for either the breakout of the resistance line to happen, give us buying opportunity, or the breakdown of the support line to give us an opportunity to sell. And of course, there was no point in time price action came close to the support line, hereby negating the idea of even considering selling this particular asset. So instead, we saw multiple breakout and retest of the resistance line at the $2,024.80 level to trigger our first buy position for the week. Then we kept on adding more positions to our existing trade as we saw price breakout of the 2030. We also had it at the 2035 and finally had the breakout of the $2,043 area, which actually gave us significant amount of profit. So let's see, the first one moved about 200 pips. The second one moved about 150, that's about 350 pips. Then the third one moved about 100, that's about 400 pips. And the fourth one, moved about 35 pips. So we had roughly about 400 pips before the bearish momentum came in. So the worst case scenario must have been between 250 to 300 pips after price action took us out at the stop loss area where we moved it to during the course of the week. So congrats to everyone who are taking advantage of that opportunity. Then to guide our trading decision for this week, remember that we had this ascending trend line marked out on our chart, which of course has been supporting this bullish momentum since last week Friday, as you will see here. And of course, you know how we use our ascending trend line. We did agree that as long as price action remains above the ascending trend line, we continue to maintain a bullish bias. And during our live session yesterday, remember we said we will be buying the breakout of the $2,035 level, and in fact I placed my stop losses just right below the $2,030 area, which triggered my my stop loss, and that buy position went into a loss. And right now price action is back above the ascending trend line and has since been trading along this ascending trend line. Now you would agree with me that we are at a crucial juncture in this market where anything could actually happen. Now remember that at the beginning of I think during the second midweek, we did acknowledge an uptrend continuation pattern here. So if I will give a visual representation of what I mean, so we had this impulsive move all the way into the structure. Then we saw price action transition into what looks like a pennant, or you could call it a flag pattern, depending on from what perspective you are looking at this from. And usually, and from a theoretical perspective, we expect that price action will break out of the resistance line of that pattern to incite an opportunity to buy. And this was exactly what happened right here on Tuesday, as we saw price break out of the resistance line of that pattern, breaking out of our key level as well at a 2030 to trigger that buy position. Now, from a technical standpoint, when price breaks out of a key structure such as this, we do expect that some point in time price may retrace back to the structure that was broken to incite an uptrend continuation. Now, if you look at what has been happening since price tested the highest level at a 2047 area, you will see that price action has been going through a series of lower lows and lower highs. No, it's a consolidation phase anyways, but it's more like a series of lower lows and lower highs, as you will see here. Now, this continued selling pressure here may incite a move that will get into retesting the structure that was broken, where we will look out for an uptrend continuation pattern. And this of course will be dovetailing to, let's see, a minimum of 140 to a maximum of about 180 pips to catch here. So we do want to be on standby to capitalize on that potential move. Now, with all the information we have gathered here, coupled with the fundamental factors behind the scenes, though the market sentiment still looks very bullish, but we could still see some profit-taking activities happen, which would reflect on the chart as price doing some retracement move. Now, if price action in any way today break down this ascending trend line, then we'll start considering selling. And in fact, I already have a sell stop order below the $2,030 area, which happens to be our key level for the week. And of course, you know how we use our key levels in this community. As long as price action remains below the key level, we continue to look out for patterns and structures that supports the idea of selling. So I have a sell stop order right there, with my TP target somewhere or anywhere around the 2008 and 2004 dollar zone, which lines up with the descending trend line we identified on the higher time frame, which of course is also serving as the support line of that uptrend continuation pattern. Now, with all the information we have gathered here that is selling below the 2030, we may have the privilege of even joining a bearish opportunity even before the breakdown of the 2030 happens, if we have significant series of lower lows and lower highs within the 2035 and the $2030 zone. So if we begin to see on our lower time frame especially after the breakdown of this ascending trend line, some series of lower lows and lower highs like this, we could actually join early enough before the breakdown of the 2030 happens. And then when our sell stop order triggers below the 2030, we would have maximized the potential of this bearish move. So that is how we will be selling the XAUUSD today. However, if price continues to maintain above the ascending trend line, I already have a buy position running, though it's currently running in a loss of about 5 pips thereabout. And if price continues to maintain its progression above the 2035 area, that means we're still within the buyer's territory, but a breakout of the $2038.50 level would be a good opportunity to maximize the potential of this bullish move. And if price continues to find new highs, then a breakout of the 2043 will welcome more buy positions. And if price continues up, taking out the highest level for this week at the $2047 area, we definitely want to be adding more buy positions to our existing trade. So this is how we will be managing our positions on the XAUUSD today. So simply put, our center of focus is basically around this 2035 area, where depending on how price reacts to this level will determine if we are going to maintain our bullish bias or get ready to start selling. Now, let me do a quick recap here. Selling will only come at the breakdown of the 2030, but I did mention that if we see significant signals before the breakdown happens, like a series of lower lows and lower highs on our lower time frame, we can join early enough before the breakdown happens. And if price climbs up and break out of the 2038, this will be a very good opportunity to join a bullish move. So I encourage us all to mark out these levels on our charts, as we will be needing them as a reference point to guide our independent trading decisions for today. Now, if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 5 seconds off to see if there are any questions before we go on to round off on today's trading session. All right, so I see a couple of comments here. Leonardo DV, all right, you are very much welcome. I'm glad you found that useful. Roy99 says, your analyst, okay, all right, thank you very much. I'll take that as a compliment. You are very much welcome. I'm glad to have you around with us in this community, Roy99. And then I can see Mad Bar and Tommy Cat. Good morning to you guys. Glad to have you around with us this morning. So it's on this note, in the absence of no questions anymore, it's on this note I would like to call it a day at this juncture. It has been a wonderful moment with you guys. I really appreciate every single moment I had with you. And in fact, during the course of the last 1 hour, 17 minutes, we've been able to run through 4 major financial assets which we have been monitoring since the beginning of this week, which includes the USOILSPOT, the USTech100, the GBPUSD, and finally the XAUUSD, all of which we were able to identify simple trading setup using fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today, and at the same time use the data to position ourselves strategically for the next big move. So let's see how things will play out. I do hope we all marked out these levels on our chart, as we're definitely going to be needing them as a reference point to guide our independent trading decisions for today. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And as a result of this let's ensure that we have a well-defined risk management strategy in place for every positions we take from our portfolio. And very, very important, they must be consistent through all the trades we take. For those who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you do want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for the last trading day of the week as we gradually approach the festive season. So best of luck today. Trade smart, trade consciously, and I do wish you a wonderful evening, everyone. You're welcome, everyone, and bye bye.